So today we are going to be talking about pullbacks. That's my first topic here. So I made some short notes that I'm going to be sharing. So what are pullbacks? If you've been trading for quite some time, you know that even when overall the market is going up, so here we can say that in this region the market was trending upwards, but then we get these pullbacks, these kind of movements, where the market is coming down, you get. So that is the behavior of the market, but generally we know the market is going up, you get. So we need to note out that even when the market is going up. So what does that mean? If you take an entry, let's say here, and then you see the market is trying to get against you, it's not good for you to get out of the market, you get. So not until when you get signals that for sure the upward trend has changed, and then maybe the market is going to come down, and we are going to look at all that, how we can avoid taking losses. Like here you can see this was a very perfect trend line. Just imagine someone was taking entries here, and all of a sudden you take entries here and then you're taken out. So we want to see how we can avoid that, and then in this video you're going to see how we can avoid such circumstances that would bring us losses. So we've understood what are pullbacks. So the next thing that we are going to do, given that we realize that they happen in a trend, so how do I identify the trend? First of all, one of the things that I use, I put some indicators. Let me put my first indicator. Let me put the RSI. Now this RSI is modified. So what do I do? When I reach here, I delete everything. So you use this information even on mobile. So I only put 50, level 50. Then depending on my background, let me use the lines. I want them to be black, you get. So it is the level is 50. Then the period also, I'm going to put period 50. So the RSI parameters, period 50, apply to close. The color or style, let me use blue. Then the levels, I only have level 50. Then I say okay, you get. So this is my RSI. What does that mean? Let me first explain the RSI. Whenever it shifts from down to up, and then it starts bouncing off this 50, I know that we are in the upward trend. You can see here that here it shifted up. Previously it was down, but then it started moving up. Here the upward trend started, and then you can see not until when it reached here, when it shifted down, that it showed that the upward trend was over. We are going to go in a downward trend, and then it reached here, then it crossed back up again, you get. So we are on the 15 minutes time frame. You can see, even if you were on the 5 minutes, it doesn't matter, but you're going to see the same reactions. So just by looking at this, you can see that at least now it's giving us a very good picture of the market. That's the first thing. But we can see that it is not enough. It is not enough to use this RSI, but at least it is hopeful. The next thing that I use to determine the trend, I use the 200 period moving average, EMA. So let me put it quickly. The period is 200. Period is 200. Exponential shift 0, apply to close. Let me use the color blue. Let me use medium blue. That's the color that I've chosen. So I add it also, you get. So I think you can see now there's a way they are complementing each other, but we are not all done. Remember, we want to trade pullbacks, but then we realize that pullbacks, you can trade them when the market is trending. But then with just these two indicators, we can see that now we've started getting an idea of the trend. So at least with this one, the market shifted here, but then it was confirmed. The confirmation came with the 200 finally, when we see that here the market started going up, you get. There is a way the 200 is reacting with the RSI. So here we can see that price had touched our 50 level, 50 level, trying to get down, but you can see that now at least the 200 period moving average was showing us that no, it's not yet time for us to get out. You get? So at least these two indicators, they complement each other, and then we can see that by the time the RSI said no, the trend has shifted. For it showed us that when the price was here, and then the 200 also confirmed it that really it were going down when it was already here. You get? So I think you can see how these indicators, they are complementing each other. So that's not all. Pullbacks, we want to see how we can be placing orders at these points when the market pulled back and then went back up. That is the strategy that we are talking of today. But if you picked some knowledge on how you can use this information in another way, that's fine. I always like that. But now the idea of today's video is we want to see how we can place at least trades here. We take more entries here. We take more entries here. Why? It's because we may find when the market already moved, let's say up to here, you didn't catch this move, but then you can jump onto the market, onto the trend. You get? That's what I'm interested in. Then what do I do next? I use trend lines. So if I see that the market is now moving in that kind of manner, it has shifted, and I see some touches, I may draw at least a trend line. I may draw a trend line. Let me quickly draw one. Let me delete it, and I draw a better one. So we are going to draw a trend line, but remember, even in trend lines, we are not looking for perfection. You get? But at least now there is a way the trend line, you can see there is a way it is improving our strategy of trading pullbacks. You get? Now here the market, the RSI showed us the market has shifted, the 200 confirms, then we get a touch here, then we draw our trend line. So we wait for other touches or near touches, because the institutions know that we draw trend lines, they will not always make them perfect. Sometimes the price goes down like that, but at least with these indicators, you can see that we've improved and reduced on the chances of us losing money. What's the next thing that we do? The next thing that we do is to add a 50 period moving average. 50 period moving average. Let me quickly add it. 50 period moving average. The period is 50. Method exponential. Shift 0. Apply to close. The color, let's use our color red. It's the color that we have chosen to use. That's our color red. And I think you can see now we are not just disorganizing ourselves, but then we are following the steps. 1, we want to trade pullbacks. We've identified our trend with these two indicators, and even the trend line, it is helping us. Then you can see there is a way the 50 period is reacting to these pullbacks, the ones that I told you. You get? So remember, we are not going to be looking at taking entries coming down. We want to take more entries going up. Why? Because the market is buying. You get? So we don't want to lose out money when we are trying to sell. So we want to see how we can take entries on this downer side. And I think you can see that here price came, it touched here, so we look for confirmation. Then we could take entries here in this region with price touches our trend line here, and then even the 50 period, so we can look for more confirmations that I'm going to show you. So you can see that generally there is a way the price is reacting to the 50 period, and then we've had it's above the 200, always note out that, or if it's below, look at the touches on the 50 when after looking at the 200 period moving average. You get? Then what is the other thing that we note out? Now we look at the areas of previous support and resistance. So what are those areas? First of all, previously, when you look here in this area, this was previously resistance. Because price came from down, it came here, it resisted, but then for this move to happen, it became support. You get? It became support for this move, then it went up. So we are going to be noting out these regions here, we are going to be marking them, because they will help us to take entries. They will help us to take entries. So now, how do I trade? Let me zoom out a little bit further so that we can understand this. So what do I use to take a trade? Now, after identifying that the RSI had shifted up, the RSI shifted up, but then I've not gotten a clear confirmation from the 200 period moving average. I've not yet gotten it. So what do I do? When the RSI shifts up, I draw a box on this candle here. I know it's a dodgy candle, but no matter, but I draw with the whole of it, with its wick, whether it's a big candle or a small candle, it doesn't matter. So I highlight it. So remember, we want to be taking safe entries. So I can quickly delete this trend line here. The trend line, I can delete it. So what does that mean? I've gotten all these confirmations that I've been talking about, the ones that I've put. So I'm going to take entries. Entries that are going to happen just above this candle, this box that I've drawn, because I highlight of the last opposite candle, the price was going the price was going up, you get, but then we see that the price went down. So this was the last bullish candle, you get, then the price rejected and then it came down. So as the market is consolidating here, we know that in consolidation, it's where the big institutions are taking out emotional traders who want to just jump into trades, you get, unless if you have a very good account to put your stop loss far. But sometimes even here, the market can just shift and then it continues down, you get. So I believe that when I draw this candle here, I highlight of this candle, when I see candles forming clearly outside here, I will take entries, you get. First of all, I've gotten confirmations that now we are in the upward trend. But now, if the price really, I get candles that are forming outside, I'm going to be in the trade, because I know even when a pullback comes soon, all these confirmations, really, this moving average, the trend line, the RSI, they are all confirming upward trend. So even I take my entries around these candles, or I can go on a smaller time frame. Let's say the 5 minutes, and then I look out for this candle here. You see, if I took entries on this first candle that was really bullish, and I take my entries here, I would be in a trade. And then you can see, even when a pullback came, I would still be in the trade. And then still, even on the 5 minutes, we've been on the 15. Even on the 5 minutes, you can see the reaction of the 50 period moving average. It is continuing to show you that, hey, you can still take entries on the 5 minutes. And then there is a consistency with the 200 period. Even the 200 period is also confirming that we are still trading from up. Our trend line that we drew is showing us that we are still up. Our RSI is still showing us that we are still trading up. So whenever price touches our moving average, we take entries. Then the one last thing that I want us to note out is how do we avoid instances like this one, when price really we touched our 50 period, our trend line, maybe we took entries here and then we are taken out, you know. So we know as the price touches our trend line, the trend always weakens, even if the market is going to continue up. We know that in volatility indices, there is what we call a trend shift. The market can be trending in this shift, and then it shifts, then it may continue still. You can see here it was also still continuing to go up, but then in another shift, you get. But then this would be a very large loss for us, you get. So as you know that I told you that you put all these ones, but then there is a confirmation of the last opposite candle on the previous area of resistance. So now, when price came here, there is a resistance here. This was the last area of resistance. this is the last area of resistance when we want to take when we are considering a pullback. So I highlight off this candle here, you see, with all its body. Then I'm going to watch candles that are going to come and they form outside, so that like that. So remember, I take candles that form completely outside the box, you get. Now you can see that now price went up, it came down, but then it crossed our 50 period. As you can see, it touched our trend line. But remember, we are taking entries. If we are to take more entries, we take entries on the candle that forms out. And then you can see that this bullish candle that came, it started from inside, you get. We don't take those entries because it started from inside. I've always said we take entries on the candle that forms outside, you get. So at least for now, you can see that these candles, most of them, that even the price action that was happening inside the box was just confirming to us that price is going down. Then one short thing, when you're taking entries, don't take them blindly. Why? You look at some patterns. At least you can see here there was an M, there's a double top here, which was an indication that we may not come back soon in the same area, you get. So at least if you combine in with some other knowledge of at least the M's or double tops, you can see that you would avoid this entry here, you get. So I think you've seen that this strategy can be really, really profitable.